16 months without rent is how long we owned that property and couldn't evict the tenant for. We did a cash for keys. The tenant was not a good tenant. Like, they were selling drugs. It was upsetting the neighborhood. I really wanted the tenant out and made them a really fair offer, and they took it on the condition that I would release some of the money up front, because they said that they would need the money from the cash for keys deal to use as a first and last on a down payment on the next place they go to. The sucker that I'm always a sucker for a good story. I wanted to help them because I didn't want them to go unhoused. I don't want to make anybody homeless. We sell homes and rent homes for a living. She took the money, didn't move out, and then it still took me another 7 months to get an eviction and not recover any of those funds. Let's say that you had 10,000 mom and pop investors that maybe have 1 or 2 rental homes in Ontario. If you make it very difficult for them to collect rent from a good tenant and allow bad tenants to stay there longer and put all these rules and regs in place, they're eventually just going to sell. And if it was a single family home or a semi or a duplex or whatever, those are going to go into the market, and they're probably going to get purchased by an owner occupant, because there's not as many people wanting to get into investing as there was. Just all the single family homes are no longer going to be rented. They're all going to be owner occupied, and any rentals will be apartments owned by REITs. I could see that happening. I think it's actually pretty likely.
Welcome to Supply and Demand with Adam Nadler. This is a podcast dedicated to the real estate market in Canada, available now on YouTube, Apple Music, and Spotify. All right, Cody Kraus, super excited to have you on here and get your take on what's going on, because you're in a slightly different market, but one that's probably, I'm assuming, getting hit by tariffs a little bit more directly than our market is, I guess, whereas we're more indirect. And so I guess let's start with just tell everybody kind of who you are, where you operate, and what's going on in your market.
Sure thing. Thanks for having me on, Adam. So Cody Kraus, we're a small brokerage, Century 21 franchise here in Windsor and Essex County. So we have 4 office locations. I'm the owner of the company, now in it about 2 years in ownership, but I've been with the company just shy of about 14 years. So the company I started with, and we're in Windsor. And so in Windsor, we're very dependent on trade with the U.S., on a lot of jobs with the U.S. A lot of the population in Windsor, if we don't work for Chrysler, which is Stellantis, directly at the minivan plant here, the tool and die industry is the second largest industry in Windsor-Essex, which is directly providing tooling to a lot of the automakers, not just North American, but to a lot of North American manufacturers. I know there was a report that came out, and I think Windsor was estimated to be the number 3 most affected real estate market in Canada by the tariffs. But you know what? At the end of the day, we're still an affordable city and area compared to a lot of Ontario. So although there's a lot of reports coming out saying that we are going to be heavily affected, our prices really haven't changed very much here in the last year. We're certainly growing in inventory. So the months of inventory ratio is growing. Our average sale price here is about $570, which is very similar to where it was back in 2021. And it's pretty much exactly where it's been for 2023 and 2024 also. So 22 is that year where obviously we spiked, but then came back down to earth. So the pricing here hasn't changed a whole lot. Again, inventory building a little bit. Especially in the 600 to 1.2, 1.5 range. We're seeing balance headed towards sellers market in those price ranges, but still actually a seller's market in your entry level, your sub 600.
How is that happening where you guys are, let's say a tariff comes across on steel and aluminum, how does that not kind of affect your, that's so amazing to me to hear that. So can you kind of unpack that a bit?
Yeah, sure. We don't produce steel here, but obviously, like, a lot of it's consumed with tool and die. So you're taking huge chunks of steel and then cutting injection mold into them. So that's a big industry here. And although I'm sure their cost of steel has gone up substantially, it's nowhere near what the cost of actually engineering the tool is. And then, okay, well, is the sale of cars going to slow down like crazy? Because in theory, the car would get a lot more expensive because of the steel tariff. I used to never buy new cars, and then we started buying new cars during COVID because it seemed like you could flip them just like you could houses. But to put it into perspective, I bought a 2018 Chevy Silverado pickup truck, pretty basic, brand new back in 2018, and it was $38,000. Very similar GMC pickup is what I drive right now. And when I got that in 2024, the sticker was 75,000, and that was pre-tariff. I don't think the vehicles have actually gotten that much more expensive since the tariffs. And because we have a fairly diverse economy, we have a lot of people working in healthcare in Michigan, in Windsor. We have a big hospital with 3 campuses here in Windsor. There's University of Windsor. There's quite a bit, quite a big tourism industry when you're in the county. So like Colchester has a big wine route. Then there's Pelee Island. There's a national park in Leamington. And then just because the homes historically have been so much lower than the rest of southwestern Ontario, 2017 to 2022, we saw a lot of retirees relocating here. And because it's retirees, they're not dependent on income from an industry that would be dependent on anything that's tariffed really anyways. They might just have a slightly different spending budget. Sorry, that's a really long-winded way of answering that question. But the other industry that's huge here is produce, so vegetables, greenhouse vegetables. Some of the companies here in Essex County are like Sunset, Mucci, Nature Fresh. So these are all the companies where anytime you're buying pepper, cucumber, tomato, cannabis, basically in North America, it's typically marketed by a company that's based out of Kingsville and Leamington, which employs a ton of people, and again, not super affected by tariffs.
So you have a robust market then, because in terms of pricing, it's been so suppressed for so long while we had kind of like a 10-year, 15-year bull run in Toronto and the other major metropolitan centers in Canada. You guys kind of had a lot of runway for, kind of going into this. Is that kind of the idea?
Yeah, and to give you perspective on that, in 2015, our average sale price hit 200,000 for the first time. And back then we were like, no way this is going to stay here. Bottom's going to fall out of this market. Like that's just too much. And then it was double digit increases every year until 2020. And in 2021, our prices here went up 34.5% in 1 year. And we've essentially stayed there since. So although they might still seem low if your context is York and the GTA, for us, our prices have gone up 250% in 10 years. Well, it started about 7 years ago, but they've maintained since.
Now, if there's like, let's say, a ton of rhetoric around the different industries that happen to be really planted in your area, um, even though if in reality it's not really affecting your market, as you say, too much, what are the effects of that rhetoric in terms of like people being able to qualify for mortgages? Is it, oh, you're located there, you're employed by Chrysler, we're not gonna pre-approve you for what we used to, or something like that? Is it more of like a cautionary stance from lenders that's affecting buyers' pre-approval level or things like that? Like there's got to be some effect. Or am I
Yeah,
way
there
off
there
base?
is. And you know what, I the only thing I've spoken to so far is the average sale price, but as far as units trading, it's down this year. Um, we should be getting our July stats shortly. But if my memory serves me right, our number of units traded on an annual basis was down about 9% so far this year when we saw end of June stats. So the number of units trading is low, but the prices aren't dropping.
Okay,
Um,
so what then would you say people should be focusing on when we're talking about your neck of the woods, when we're talking, because there is a lot of talk about Hamilton, the Niagara region. You're out in Windsor, which is neighboring Detroit. And everyone's talking about how manufacturing is getting slammed over there, but you're actually in the weeds and you're saying, well, we're actually not as affected as people think we are. What should people kind of take away from all of the rhetoric that we're seeing?
So there is some impact. Like there's been layoffs and shutdowns at the Chrysler plant. We're also getting an EV plant right now, or a battery plant. So it's LG and Stellantis. It'll be interesting to see what happens there. But if I had to give you a takeaway from it, it's diversify, right? And I was listening to some podcasts recently talking about Alberta, and I think part of the reason Alberta is having the market that they're having right now is because they've diversified. They were super oil dependent, but now they've diversified into so many things that oil could still slow down, but they still have a lot of other industries to keep them propped up. So yeah, we're dealing with tariffs right now in Windsor, and that affects steel and manufacturing and everything like that. But if your economy is robust, like you mentioned, where you have healthcare, where you have tourism, where you have a heavy retiree population, things like that, well then, or agricultural, again, as I mentioned, is another one of our big ones. If you have diversity, then you're less affected by, the effects of policy on one specific industry. So maybe that's a good takeaway from it, but not to make light of the people that are struggling. There absolutely are some people that are struggling here. And my hope is that they have two incomes in the household and one is less affected by the tariffs than the other. So when I say that people are affected, it's not that prices are falling off the cliff, but to your point, they are going to have a tough time qualifying for a mortgage if they're on layoff right now. So instead, they're hunkering down instead of panic selling.
So based on that information, what do you think the future holds for your market in particular and kind of markets that are kind of bordering the Rust Belt?
So one reason a lot of people look to this area, besides affordable housing, is the weather. So we're technically the most southern point of Canada, besides Pelee Island, but Pelee Island's considered part of our area also. So our winters are a little bit more mild than most of Canada, not the West Coast like Vancouver, but slightly milder, if that's the right way to say it, compared to Toronto being 4 hours south. Um, the other thing is from a accessibility standpoint or sake of, ease of traveling, things like that. So I can leave my house in Kingsville and be at the Detroit Metropolitan Airport in about an hour and 20 minutes. If I lived in Windsor, it might be 40 minutes. Um, so I can leave at 6 a.m., cross the border in Windsor at 6:45 and, potentially be in Miami by 9:30, 10 o'clock. But if you want to go see, pro sports or big concerts, that's all 10 minutes across the border in Detroit. So you get a lot of the amenities that you would get in a large city like Toronto. You just need a passport to do it.
Have you seen a lot of tension just, I mean, socially within your area because you guys are crossing the border so frequently?
Yeah, so there's a lot of people that, for one reason or another, we're noticing a lot of people are selling their Florida homes. I'm not sure it's because of tariff wars and trade wars and all that kind of stuff. It might be part of it and might be the emotional aspect of it. Um, but just like speculation on property in Ontario has kind of come to an end, there's really high inventory ratios in South Florida right now too. So condo fees are spiking like crazy with all the hurricanes that they've had. So holding costs have gotten a lot higher. So a lot of people are selling those off. Then there are a lot of people, and you'll talk to them just in passing. I haven't been to the traveling to the States just with everything going on. That's what they say. They don't really take a side or say Trump's bad, love Mark Carney. It's not so much that they just say with everything going on. And that's like an all-encompassing thing. Oh yeah, that makes sense. You wouldn't go to the States with everything that's going on. So there is some tension where people are, trying to keep their money here, but I would say less so than the rest of Ontario and maybe even Canada, just because so many people in Windsor still get their income from American companies, whether that's working for them as a contractor in Canada or remotely in Canada or directly for them by crossing the border every day. Whether that's nurses, doctors, engineers, executives at the auto companies. I'd say it's less tension. Plus, if you want to go watch a baseball game, you can be at Comerica Park to watch the Tigers again in an hour, or I can drive 4 hours and see the Blue Jays and pay way more for parking. So as much as there is some tension, I would say it's maybe a little bit less tension here than other parts of Ontario and Canada.
Is there something that your community in particular is really pushing for or looking for in a trade deal right now?
I don't know. It's a good question. Our area is typically one that benefits from a weak Canadian dollar, if that makes sense, because American manufacturers will keep building in Canada if their American dollar is going further. Um, the big thing is, how do we keep the manufacturing here? Because if we lose the manufacturing that we have, again, Chrysler is one of the biggest employers in Windsor. I think it is. If it's not, it's number two, but it historically has been the largest. So as much as, we want Canada to come out on top, at the end of it, we still want them to do business with us.
So is it kind of like almost a balancing ratio, I guess you would say, between the strength or weakness, relatively speaking, between the US and Canadian dollar versus the cost of the tariff? So if somebody's looking to obviously the states wants more onshoring of manufacturing, but if the U.S. dollar remains too strong, then the cost of the tariffs will not outweigh the I guess Canadian dollar being weak enough where you can just go and even with the cost of the tariffs do it cheaper in Canada. Is that kind of
I think
yeah.
so. But you know what? The other thing too is like the labor in Canada is very expensive. So like it's all union at the Chrysler plant here and they can make some really, really good money. I gotta think that they're not paying the employees that much money in the States. Um, it's just a high cost of living in Canada in 2025 and the unions are keeping that cost of labor high. So either it's gonna get automated or they won't retool the shop and they'll eventually relocate the manufacturing to the States where they can do it cheaper and, to your point, keep it within their fence. But if the Canadian dollar is low, American dollar is high, tariff or no tariff, it might still be cost effective for them to assemble here. I don't know. I don't know the ins and outs of that. That's not really my realm. Um, but obviously, I try and keep an eye on what's going on there to try and make it relevant to the real estate industry here and learn as much about that correlation as I can. But it's not my specialty by any means.
You have a podcast, which I mean, I had a great time on last week or 2 weeks ago, I think it was.
Yep.
And you've been talking to a lot of different people. What would you say is something that you've kind of learned about or talked to, somebody that you found you were kind of taken away with, that you were like, wow, that was an amazing new thing that I didn't know about because you're also talking to people all over the country just like I am. Um, what's something that you feel in your podcasting journey you've kind of learned about?
Interesting. I guess maybe specific to the real estate industry, just that
Just
there
anything.
1,000 different ways to skin a cat, and everybody does real estate in their business so much differently. Um, And I think the saying is there's only so many ways to skin a cat, but the truth is real estate's so broad and has so much opportunity. So like you'll have people that, specialize in commercial. Then you'll have people that are, condo specialists. Where's the opportunity for investors in Canada right now? Well, there's different landlord tenant rules and boards by province. And it seems like the opportunities in Alberta right now. And so it seems like good market here, bad market here, there's another market that's doing something totally different and maybe another one that's doing the same. So, you know, we haven't had, like I said, it's been a flat market, basically 23, 24 and here into 25. And I think that's actually a good thing. Um, because buyers for the last, 5, 7 years probably just feel like they've gotten sidelined, cash offers way over asking, no home inspection, and that doesn't give them the protections that they need to often feel confident coming into the real estate market, especially if they're a first-time home buyer. They, haven't budgeted for maintenance and home ownership before. But it's interesting because again, flat market here, Saskatoon, most of Saskatchewan and the prairies are on a tear right now. It was Calgary 2 years ago. They seem to have really increased in price to the point where they're not exactly booming like they were. Alberta, Edmonton, however, is having an incredible year. And I've talked to realtors in Edmonton for the last 10 years. And I always thought, man, it's such an oversupplied market. It would make sense to start, gobbling up condos out there as investment property. Now it looks especially good because I've learned that they have much better landlord tenant laws or rules. Um, but I guess maybe the thing that I've noticed is that there's opportunity in every market. Now, whether that means going to a different one and finding a different market to realize that opportunity, or changing strategies and pivoting. So my investing journey started back in 2015, and it was all single family rentals, and they could cash flow at the time, and it wasn't huge down payments, and the tenants were generally pretty good and thankful that you were providing them with a good home to live in, and then you know fast forward 10 years, those houses are worth, $400,000 instead of $100,000. And now they don't exactly cash flow. And it's like, okay, well, might as well sell these off now, and put them into something else. And, I've dabbled with condos and with multifamily and all that kind of stuff. And they just don't seem to be working like they used to. So then it's, well, do I look at another market? Do I look at an Edmonton or a Calgary or a Saskatchewan or, Montreal or East Coast? Like we saw a lot of people from Ontario scatter during COVID, and still too they're moving around, and it seems they're trying to find a different opportunity within Canada. And we saw some money go to the States too. There's a lot of real estate investors leaving Canada and buying in the States, even though they're still choosing to live in Canada. So it's interesting networking with different people around the country and even the continent, figuring out where the opportunity is. And even if it's not in, residential, well, does it make sense to pivot and to get into agricultural, or to look at the stock market now and look for dividend funds, or does it make sense to look at commercial, because there's, vendor takebacks often available in commercial where there's usually not in residential investing. So I guess just hearing about all the different opportunities, strategies, on the sales side of it, again, I know people that are just farm specialists. They only sell farms. And then you have people that tackle every single kind of property, and then some that just super niche up into one certain specialty too. So I guess just seeing the way that everybody does it differently, and even talking to yourself, having ran a large team. I think you said there was, 3 team leads and 15 realtors and 3 or 5 admin or something like that. And then, back to one man operation now with probably an assistant or two. It's just different to see how everybody can do it differently, and it's always a moving target. And it seems like everybody's always reevaluating how they're doing it, and open to the idea that somebody might be doing it in a different way that's working for them.
Yeah, so a couple things that you mentioned there was the capital kind of scattering out of Ontario,
Yep.
which is a very new thing for if we're looking at the last 20 years, in terms of real estate in particular. And you mentioned the prairie provinces really kind of carrying the torch on that for basically all of Canada. I mean, the Maritimes are doing well as too, but nothing like Alberta. Alberta's really going wild. And the one thing in particular that you mentioned is something that we've been kind of talking about in on our podcast with some other people, is the imbalance and the pendulum swinging in one direction really far when it comes to the landlord tenant board and
Yep.
the rules around that. So, as a real estate investor yourself, what have you seen that would make you kind of second guess your own strategy, where you've now said, well, it's time to pivot. It's there have been changes that have been made that are big enough that it worries me or concerns me as an investor.
Sure. So one of the biggest ones is wait times. Um, During the beginning of COVID, Doug Ford came out and announced that there would be no new evictions. I'm sure you remember that moment in time. And a lot of people took that as, I don't need to pay my rent and I can't be evicted. And it wasn't saying that you don't need to pay your rent, even though some took it that way, just that no new orders would be given for non-payment. However, that was for a period of time and then it ended. But then the thing is, there was such a large backlog that it penalized the investor. So like I had one specific example where we purchased a property and the understanding was that, hey, we're going to be tearing this home down, in a year when your initial lease term is over, because we're working on permits to build a new fourplex. That's what we're doing. Okay, no problem. They moved in, paid a few months of rent, and then just stopped paying rent. We kept maintaining the property. I was having the grass cut. If there was issues, I still had to repair appliances, replace the stove, that kind of stuff. But then they just stopped paying, and we got an adjudication hearing is what they call it. It's not really a judge, it's an adjudicator. And I think there was a real shortage of them, and then also a lot of people getting out of that as a career. And so we had our hearing, and the adjudicator just didn't make a decision. And so we were in this holding pattern where we're like, we don't know if we're going to get an order to have the tenant evicted with the sheriff or what's going to happen. And we just waited and waited and waited. And finally, they just said, hey, we're having another hearing. So either it was heard and the adjudicator just didn't want to deal with it, or they quit and went to another career. But long story short, 16 months without rent is how long we owned that property and couldn't evict the tenant for. Now that was the absolute worst case, but it's still not uncommon now to be 6, 7, 8 months without rent. I even had one where we did a cash for keys. The tenant was not a good tenant. Like they were selling drugs. It was upsetting the neighborhood. I really wanted the tenant out and made them a really, really fair offer, and they took it on the condition that I would release some of the money up front, because they said that they would need the money from the cash for keys deal, or an N11 in Ontario, to use as a first and last on a down payment on the next place they go to. And the sucker that I'm always a sucker for a good story. I wanted to help them because I didn't want them to go unhoused. I don't want to make anybody homeless. We sell homes and rent homes for a living. And she took the money, didn't move out, and then it still took me another 7 months to get an eviction and not recover any of those funds. So after and that's like two of very many occurrences. Another occurrence right now, 2025 example, I have a new fourplex. I think we got occupancy maybe 16 or 18 months ago. Built it brand new, and we have upper and lower units side by side. And the upper unit, they added like a bidet attachment to the toilet, and the line cracked and it flooded the lower unit to the point where this thing is stripped to the studs right now. The mechanical's taken out, the kitchen cupboards are taken out, the drywall's all gone, and the tenants are still living upstairs. Had told me they were moving out, so they didn't pay rent, then decided that they were going to stay, and then so paid their rent up again to get current. And in the meantime, I have to pay to house this other family that, through no doing of their own, their entire unit was, filled with mold because of multiple leaks from this upstairs unit and the effect that it had on the lower unit. And there's almost no recourse for the upper unit tenants. And they're actually getting upset with me that it's not being repaired fast enough because we had to do drywall work in theirs too. And I'm at the mercy of the property restoration company there. But I understand why the rules are the way that they are, and I think that they're there to protect both parties. And at the end of the day, the landlord isn't dependent on that rental for a place to sleep. So I understand why there's plenty of protections in place. However, it's gone too far to the point where nobody wants to be a landlord anymore. Not if somebody can abuse me and live in my property. We had one tenant relocate to Michigan or Ohio for work. They kept their home in this area, and then they came back and they issued the paperwork to the tenant to say, hey, we're moving back into our home. They weren't in a term. It was month to month. They gave them the proper notice, and they were ready to move back in, and they get there and the tenant's still there. So they had to go through the LTB adjudication process again. And the whole thing was tossed out and dismissed because they made a spelling error on the paperwork. So then they had to reapply again. And in the meantime, this family had to go find a house. So they moved back to Michigan while they just sat and waited until they found out if they could move back into their own home again. So when you abuse the landlords, the property owners that much, eventually the capital is going to leave, or they're just going to sell the property and put it into a different type of asset or a different asset class altogether. Um, to your point of the pendulum swinging, it's way too far towards the tenant right now, to the point where it's just going to, cause the landlords to go to extinction.
What would, I guess, kind of a tough question to answer, but what would you like to see changed?
Quicker hearing times, right? And that would benefit both the tenant and the landlord. So if you have a landlord that's doing things in a not right way, the quicker it's heard, the better, right? If they're not maintaining the property and it's having a negative impact on the tenant, it would benefit the tenant if that was heard more properly. So both the tenants and the landlords, you could argue, are being affected by it, but only the good tenants and the good landlords are the ones being negatively affected by the long wait times in the LTV. So if you can bring those wait times down, it'll positively affect the good tenants who maybe need property repairs to be done, or their landlord's harassing them or something like that. And for the good landlords that have tenants that are playing the system and exploiting the issues with it, well, now they're the ones being taken advantage of, and who's going to leave the system is the one being abused. So you're eventually going to lose the good tenants and the good landlords because the system's not working for them. It's actually benefiting the people that are abusing it on either side. So if they could bring down wait times, it would help substantially.
And in terms of the contrast with, I guess the rules out in Alberta, I don't know much about that, but you seem to have probably a better grasp on it than I do. What are the differences there?
Much quicker wait times, and I think um, more black and white decision making. So when someone's given an order, or sorry, has an application in because of um, non-payment of rent, for example, there's a lot of weight given to the story in Ontario. Like, well, is there young children in the home? And not to make light of that, I have young children, but if the rule is the rule should apply regardless of the circumstance, uh, with limits, right? But when you're just up for a good story, well, then a good storyteller might be able to exploit the system, right? And so I think it's a lot more black and white decision making based on rules and regulations in Alberta, along with shorter wait times. Um, but also in Ontario, there's just like this big gray area where if you can concoct a story, and again, this isn't just towards the tenant. If the landlord can appeal to the emotional pull of the adjudicator, they might be able to have it swung in their favor also. And I think the rules should just be applied as they were written for. The less human interaction with the rules, the better. If we agree that they're good and they're principled, just let them be the rules and let them stand. Don't get in the way of them.
That's really interesting. So less wait times, which would mean more manpower, but the manpower itself be a lot more regulated in terms of their ability to approach the situation rather than a gut feel or their own personal biases kind of playing into the situation.
Well, yeah, apply it to the criminal judicial system, right? Did you steal, yes or no? Well, yeah, but here's why. Well, no, like maybe you were trying to feed your family, but stealing's still wrong, right? So the story doesn't matter as much as if the rule has benefit, if it has merit, if we can agree that it's a good rule overall, then it should be applied evenly, not situationally.
Right, because it's theft. I mean, you're just stealing shelter essentially. It is theft. You're taking something, you're not paying for it.
Yep.
That's really interesting. So, in terms of all of the investor focused mindset that you have here, you're now looking at other places where there might be opportunity because you just know that Ontario has swung way too far. And from my understanding, and I'd love to hear your thoughts on this, it doesn't seem like there is any concerted effort or political will to actually change it and to move things in a direction where you're going to give some reasonable incentive, structure, or protection for people to provide housing. And if we don't have people providing housing and there's no protections around that, then there won't be any housing, right? Because we can't rely on, some magical, politicians' words to make it all happen. This stuff takes decades to put together for the amount of people that we have here. And you guys aren't even in a very highly dense area, and you're still having major issues with it. So is it is it right in saying, where I'm kind of assuming that you're seeing this the same way I am, which is there is no concerted effort to make changes. There is no political will.
Yeah, there's not like Doug Ford, our premier, he has said that, we got to get the wait times better and clean it up and make it better. And there's an overseer called the ombudsman, and they have identified that there's issues with the LTV. But to your point, there's no political motivation to make it better because at the end of the day, you want votes. So if you say we're going to clean it up and we're going to make it better, that appeals to the landlord, the investor. And if you don't do it, then you're also appealing to the tenant. So you say one thing, you may not do it, but also it's a pretty big problem. How quickly is it going to be fixed? And are there other, glaring issues that seem bigger right now? And fighting for the landlord is not going to gain you popularity right now, right? Well,
There's less of them, right? If you're looking
there's
at
less of them.
right, if you're looking at the number of votes that you're able to get, and you're looking at your constituents, well, there's a lot less landlords than there are tenants.
Yeah, but also like, oh, poor Mr. Landlord who owns 10 properties. He's bringing in, all this rent. I just need a place to live. I don't need 10 homes. Why does he need 10 homes? Well, get rid of all the landlords, and there's also no homes to rent. To your point too, and I'll make 2 points here because you asked your question about how am I changing my investing mindset, and the other point you mentioned is how can the regulators fix it, or do they even want to? And there's a saying that's don't attribute stupidity what you can attribute to, or sorry, don't attribute to malice what you can attribute to stupidity or ignorance. And so I think what's happening right now with the landlord tenant board system is that not on purpose, but by being naive, by just ignoring the problem and hoping that it's going to go away. Let's say that you had 10,000 mom and pop investors that maybe have one or two rental homes in Ontario. If you make it very, very difficult for them to collect rent from a good tenant and allow bad tenants to stay there longer and put all these rules and regs in place, they're eventually just going to sell. And if it was a single family home or a semi or a duplex or whatever, those are going to go into the market, and they're probably going to get purchased by an owner occupant because there's not as many people wanting to get into investing as there was. Okay, well now instead of dealing with 10,000 mom and pop landlords, if I'm the LTB, if I only have to deal with 10 REITs and they own all the rentals in Ontario, well, maybe things will actually get quicker because I'm not waiting for this paralegal and this landlord and this paralegal and this landlord on the call with the adjudicator. Now maybe I'm just hearing one REIT and their 100 matters that are before us. But also, if I take advantage of you, Adam, and you're a small landlord, and you're in York, and then I go move to Ottawa, I can take advantage of you in York and maybe not have the news spread to Ottawa. But if there's a REIT that owns apartments in Ottawa and Toronto and Windsor, they're going to have a history of who their bad tenants are, and they'll just be able to look in their own internal database and go, Cody Kraus, bad tenant, wouldn't rent to again, trashed the place, sold drugs, was late on rent 10 times, whatever. So now all of a sudden there's less landlords for professional tenants to take advantage of, and they're going to have their own internal database that keeps record of that. So maybe by pushing all the mom and pop investors out of ownership, they'll actually just be left with a couple REITs. And these REITs all know exactly what the landlord tenant board rules are. Like some mom and pop landlords don't know the rules, and they'll go, oh, well, so-and-so didn't pay, so just go change the locks. But you can't do that in Ontario. And so that's one thing that probably is happening, is that just all the single family homes are no longer going to be rented. They're all going to be owner occupied, and any rentals will be apartments owned by REITs. I could see that happening. I think it's actually pretty likely, and not 100%, but it might go from, maybe 30% of homes were single family homes were rented before. I bet you it's probably going to be more like 95, 98. And as far as, rental apartments go, I think they're all going to be owned by REITs or small funds. Eventually, the REITs probably won't want the 12 unit or the 15 unit building, but anybody building anything new, eventually, I think they're going to be sold to REITs if they're not already owned by REITs, and then things at the landlord tenant board might actually get better for that reason. And then the other thing there is, what am I doing as an investor? How has my mindset changed? I've changed asset classes, so I think I only um, in my personal portfolio, not with partners, I think I just have two residential properties now, one condo and one home, with great long-term tenants. I have some multifamily that I'm likely going to be divesting out of with partners, but I've liquidated almost everything and put it all into commercial. Because commercial real estate investing in Ontario is still very much contract law. If your tenant doesn't pay, well, then you can, take your unit back essentially. And it's all courts. It's not adjudicated by feeling with 7 and 8 and 10 month wait times. It's contract law, and you're going to be dealing with lawyers, and you're probably going to be reaching a settlement pretty quick, or you just take your unit back. And it's a higher barrier to entry. It typically takes more capital to get into, and then when you do have a vacancy, typically it's longer. So there's some pros and cons that come with that, but there's more protections for the investor.
That's so interesting. Yeah, it does seem like over the last couple of years, especially with this last federal election, when there was a lot of talk of the increase of the inclusion rate on capital gains, and also with the condo market being as soft as it is, I know that a lot of builders and developers have kind of said, well, why are we going to build this tower that, as condos and try to sell it to investors that are not there, rather than maybe let's just shift the whole thing into purpose-built rentals
Yep.
and kind of move in that direction. And I think what will happen is that as we see that continue, which it clearly is, I have a few friends who are developers, and they're all telling me, yeah, we're moving more into purpose-built rental. Is that the supply shock of that is going to be substantial to the rental market. It's, rental market clearly been on a huge, I don't know about your market, but here, when interest rates went up, the, lease prices skyrocketed. We saw a 50% increase in prices in like 2 years. Like, it was insane. And what that'll lead to is eventually, I think we're coming close to a correction is probably inbound, especially as we enter into some weak form of, interest rate cutting that will eventually make our way to us as the Fed looks to kind of cut maybe in September, it looks like. So overall, I agree with you, and I do see that if people were upset about these big REITs kind of buying up everything and owning all the real estate, well, then maybe don't abuse the mom and pops who are just trying to, make a way for themselves and try to escape
Yep.
inflation. So I think that you're right in that assumption. And I very much thank you for your time, because you have a wealth of knowledge both as an investor and as somebody who's actually actively trading and representing people in a very not so well-known market, right? Where there is a lot of cross-border activity, a lot of manufacturing, and it does affect the cities where I am, in Vancouver and Montreal, where, a lot of those trucks make their way here. So I
Yep.
really thank you for your time and for your kind of insight on this. Where can people find you?
Sure. So our brokerage is Century 21 Local Home Team Realty Inc. So anywhere you go, whether it's Facebook, Instagram, YouTube, it's at Local Experts.
Okay, and online, your podcast, social media.
C21localhometeam.ca. Yep.
And what about your podcast?
It's the Everything Real Estate Show.
Awesome. Awesome. Thank you so much for your time, and thanks for watching, everybody.
Thanks so much, Adam. Appreciate it.